Good evening. This is Tom Alexander. It is Saturday, October 1st. It is 7:07 p.m. Eastern Time in beautiful post-hurricane Charleston, South Carolina. Wow. We have a really big week coming up. We have a really big Globex session beginning Sunday evening. We are going to, and it seems like I say this every week, we're going to have an extremely sharp move. But let me make the case here. I'm really typically not a stop clock, and I don't pretend to know if it's going to be up or down. I'm going to try and give you a measured view of the bullish case, a measured view of the bearish case as we head into Globex Sunday evening. But I do think next week is going to be maybe one of the most important weeks in the stock market since the high that we saw back in January. So let's take a look at the charts. Now, by the way, this is the video addendum to the written report. If you're not receiving the written report and you've stumbled on this in YouTube, if you would like to receive the regular written report, send me an email to tom@alexandertrading.com. Also, if you find value in this, I would very much appreciate it. If you would like it, and by all means, feel free to share it. Feel free to subscribe to the channel. You'll be notified when I do updates, and I will be updating. I've been updating frequently over the past week or so because the market is at an increasingly critical juncture. Okay, you can see here the indices are teetering on the edge of the abyss. Something is different about this chart. If you look at the SPX, top left, NDX top right, Dow bottom right, and the Russell bottom left, what do you notice? Well, all four of the indices have been in extremely mature profile structures. They've been in balance areas in auction market / market profile parlance. What has not occurred yet that has to occur, and I think will occur next week, is a break of the Russell outside of its balance areas. And I think that will confirm the move. Now, these are the cash markets. I actually think that the move is going to be confirmed or not in Globex, but in the cash markets, what you have to have, if the Russell trades below its balance area low that occurred, print low that occurred on September 27th, it's almost a certainty it's going to take out the June low, which it has not done yet either. So that's a divergence. Divergences can resolve bullishly, they can resolve bearishly. We'll see. I mean, there are a number of reasons to be looking for an extremely sharp move here. This is one of them. Now, and to make it succinct, what should not happen under a bearish scenario, well, what really shouldn't happen under a bearish scenario is that you see really any strength at all in the cash session on Monday in any of the four indices. I'm going to be a little bit surprised if there's going to be a bearish resolution if we don't gap down Sunday evening, and I'll be surprised if we gap up on Sunday evening and then it holds through the cash session, because we can get some funky trade around that 3:30 a.m. European Open time frame. But in the cash session, if we don't open down and we start trading higher, I think this market will scream higher. But there's a lot of detail that goes into this. Now I'm going to show the weekly perspective of this, and this is in the report. All these charts are in the written report. You can see here, and once again, we have the four U.S. primary trading indices. We are about, what is important here, or what I think is salient, if you look at the Russell, now we're waiting on the Russell short term to confirm the move that we've seen the last week and over the last few days, but it's already trading below the pre-pandemic highs, as is the Dow. So this is yet another divergence. The S&P, the SPX is about 5.5% at the moment above the pre-pandemic highs, and the NDX is about, and this is in the report, but let's just do it for fun. Let's see, make sure I have the right thing. Here we go. So this is going to be very close. So it's about 10 or 11% from the pre-COVID high. So to me, this is, you know, if you're looking for what is support, well, there's really no objective support really in the Dow or the Russell. There's potential support. It's certainly a level of significance, that pre-COVID high in the SPX and the NDX. But if the NDX falls 11%, the S&P is gonna fall more than the 5.6% that it would take to get to the pre-COVID highs right here. So this is reason, I don't know, number 100 why we're going to have a really, really sharp move. All right, now I want to show real quickly the profile graph, and this is in the report. Here is a daily view of the market profile graph, and basically what that means is each letter is 1 day's trade. And if you know, there are a couple of things to notice here. You have a migration of value, the attempt to migrate this thing lower. This is an area of value. You had an initiative move lower, and now we have this balance area here, and there's an attempt to break out of this mature balance area to the downside. This is a very, very specific market condition, and it's one of the more consistent market conditions that you can trade. One of two things is highly likely here. Now, this is already enough of an excursion below this low to consider this an attempt at an initiative break. So what that means is, and an initiative break is a very specific market condition. It implies the market is in the very early stages of moving sharply lower from this balance area structure. Now, and this gets back to what I said about if we don't go down immediately, we almost gap down. I would not be surprised to see us gap down. If the cash market opens up and we trade above, and this is just sort of a rule of thumb, above the 50% retracement of Friday's range, it's likely that we will retrace this structure in a fraction of the time it took to create it, which means to me, it would not be surprised to see us trade above last week's highs by Tuesday. If this doesn't trade sharply lower, I think it's going to trade sharply higher. Okay. I'm looking at the report now because I don't want to miss. Oh, I put an analog in the report highlighting the 2008 market, and I'm looking at it on one of my screens. I will refer you to the written report. I'm not going to go through it on the video, but we have been following this analog more or less, and now we appear to be at the tipping point that we were at in 2008, where we had a waterfall decline that lasted about 3 or 4 days and was down. The market was down very, very significantly percentage-wise in those 3 or 4 days before there was a short-term low, as we headed into really the momentum low of the bear market off the 2007 high. So take a look at the report. This is a very critical piece of information. Okay, let's look at the internals. And this is where I'll come back to VIX. Okay. This is where I want to be measured, and I want to make a bullish case, and I want to make a bearish case. Now we're auction market traders trade on price action, and price action either confirms your assumption, it confirms bullish, or it confirms bearish, no matter what you think. And this is something that I tell myself every day, and I tell you guys every day, because price is reality, price is what we trade. It doesn't matter what you think or what you read on Twitter, what you read on and listen to on CNBC, whatever. Price matters. Now, it's typical. This is a bear trend type of behavior between price and breadth. I've alluded to that relationship numerous times off the January high. Price and breadth behave very differently in bull trends than it does in bear trends. This is a bear trend price breadth signature. We have reading after reading after reading off of the high that we made in August, and continuing off the high that we made September 12th. It looks like there's more and more and deeper selling distribution in this market. Now, eventually this becomes climactic. It's also a signal of climax. We had a period over here off the June high where we had 4 very close readings into this low, and then we got that massive bungee jump. Well, we've had, we had in the last 6 or 7 days, we've had 1, 2, 3, 4, 5 negative breadth readings. And now if we get the washout Monday into Tuesday, you're very likely going to see another 1 or 2 negative 2000 breadth readings, which will put this work as more compressed, or as compressed as it was at any time during 2020. We are reaching 2020 levels of compression, and in some measures we've exceeded those already. Now, here's the bullish case. On Friday, and I'm going to show it a more granular view of this. If you notice down here, breadth was barely negative, with price a whole lot lower than it was a previous day. Certainly, it was the least negative day of all of the days that have been negative since the September 12th high. Now, is that a lack of momentum, a downside momentum that's going to manifest in a huge monster bungee jump higher, or was it just some sort of mechanistic function in the market on a Friday afternoon, and Monday this thing is going to absolutely crater? So you can see there's a divergence here with the lower lows here and the higher lows here, and especially from Thursday into Friday. Now, if this, and again, we're going to know pretty soon. This is one of these binary situations where I don't see how the market just flounders here and we have a real narrow range day on Monday. I just don't see how that's going to happen. It could, but I just don't see it. Okay, now this is an even more illuminating view of the current divergence. What you see here, this is a chart of the ES, the day session only. Below it is NYSE breadth, and you can see the lower lows here and the much lower lows in price here, and the much higher lows. Now, breadth did go out on its low on Friday. But this is something that is going to be resolved, and it's going to be resolved very sharply, and we're very likely to know Sunday evening at 6 p.m. Eastern time. All right, let's take a look at VIX. And VIX has been stubbornly high. It's been hovering around above 30, but it hasn't really shown the level of extreme that it typically shows at strong pivot lows, meaning a spike to at least 35 or higher. even in this leg up off the low from the 2020 low, you had periodic excursions, spikes, close to the 40 level, certainly above the 35 level. Well, we haven't had one of those. It got just above 35 at this low, and it just kissed it right here at this low. Well, we're there again. So this is yet another piece of evidence that I think portends an extremely sharp break. Either if we trade another 5% lower in the next couple of days, next week, and test or trade below the pre-pandemic high, I think you're going to see VIX 40 plus, 35 plus easily. So that's another piece of evidence there. Okay, a couple of other markets to take a look at that we're following very closely in the room, and everything is so highly correlated now. All the interest rate markets, the dollar, gold, crude, certainly the stock indices, and gold and crude are very interesting markets. And they're also markets that we cover in the live trade room and that we do day trade because they're such good day trading markets. Now, crude continues to chop lower. It continues to make a series of lower lows and lower highs. Below recent lows, there is really nothing from an auction market perspective in terms of potential support until you get down around the 67, 62 area. So now if gold were to close above 82.94, 95, which is last week's high, then maybe something could be developing to the upside. But unless that happens, I think you're favoring shorts in crude. Gold. Gold is sort of similar to crude. It's making lower lows and lower highs. It is also, if you go back, this is a long-term chart. This level is absolutely critical. Here's the bottom line. To restore any bullish, immediate bullish outlook in gold has to close above 1697. Gold is between that level and it's between the spike low now, but I don't, you probably want to take a hard look at gold being long above 1697, and if it takes out last week's low, you certainly can't be long. You may want to be short. Guys, buckle up. I think it's going to be a fun week. I'll be in touch. Thank you.